Hey guys, it's Paul with the Ugly Motel. And as we're looking to do our property development of the Quinta North of our Ugly Motel, I figured I'd just touch on how the recent market changes are changing the way we're looking at this project. Everything from the market crash to the emergency rate cuts that the Fed is talking about, and just what this all means for property development in Lincoln, Nebraska, what that means for real estate in general, and how that affects the hospitality industry and how it affects what our sales strategy is going to be moving forward at the end of 2024. A lot of this is still changing. We don't know what's going to happen. We know that unemployment has now triggered what is technically a recession and what that means for hospitality in general. It also is going to give us an idea of how to position ourselves this fall and in the winter to come. So I feel like this is just interesting. This is just the stuff that I go through in my head and what that means for hotel sales and for property development in general. One of the businesses that I own is a U-Haul neighborhood dealership. And if you'll notice, I have quite a few U-Hauls back in. That's not just because the market is changing. We do have college that's right around the corner. People are moving in. So they're coming from the rural areas. They're coming to Lincoln, Nebraska for college. And so that doesn't really give us a good indicator. But what about the rest of the scuttlebutt information that we're going to get from just looking at these small little businesses and how they're changing and what that means about the overall market? One thing that's interesting to notice, it's really empty in here. Now, we're an economy brand hotel, so it doesn't mean that this is out of the usual. In fact, most people stop spending discretionary money when they feel like things are changing a little too fast. So interest rates right now for real estate investment and stuff like that is about 6%. It's crazy high. What's nuts is my hotel's financed at, like, I want to say 4.5%. That makes sense in a normal economy, but we have two things that are changing right now in Lincoln, Nebraska. We have a special session that they're voting to try to lower property taxes. Normally, I'd be all for that, but currently, while you're trying to do TIF financing, that's like the worst timing ever. Add on to that, if we are going into recession, the chances of somebody wanting to stay at La Quinta versus the travel lodge, it's like that isn't the prettiest looking thing, and we've done a lot to try to remodel that. But do I really want to pay another $100 for the La Quinta across the street? Grassland's just been sitting there for a very long time, and I'd like to see it developed. If they do lower the interest rates, that makes it a little more appetizing to take on a new project, but it also is probably in response to a growing recession, and recessions usually mean that people aren't traveling for pleasure as much anymore, and that means that won't do as well. With a $100,000 a month mortgage, it needs to do pretty good to justify it existing. Whereas the other hotel, it's like a couple $1 million, but comparatively, 15 million, 2 million. When central banks slash interest rates unexpectedly, it's usually to stimulate economic activity during downturns. For business, lower borrowing costs can mean cheaper loans. However, these cuts can also signal economic instability, so it's essential to balance growth opportunities with risk management. It might make more sense to focus a little bit longer on the older hotel. Finally, we have the jobs report coming out. That'll typically, I feel like that's going to get worse. And if we end up with more unemployment, that means that less people are going to be able to pay their bills. That means less stability inside the rental markets. And overall, it means a lot of turnover, a lot of chaos. So a recession might be great for lowering the interest rates that I'll be paying for a mortgage. It's also going to lower the appetite for higher risk development. If a bank is looking at the market and saying, a recession's coming, we probably shouldn't be in things that are tied to discretionary spending, that's going to lower their appetite for new development in general. So that's a variable we're going to have to play with. Economists are predicting a slowdown in economic growth, marked by reduced consumer spending and higher unemployment rates. For businesses, this means lower revenues and tighter budgets. Adapting to these conditions requires innovation strategies such as cost-cutting, and focusing on essential services to maintain profitability. For hotels, that means, should we focus more on the nightly guests, or should we focus more on sustainable contracts like traveling nurses, contractors, and things that are coming to our area? It's a really interesting time to be investing or trying to develop any kind of business, because there's so much uncertainty between AI replacing people's jobs. These jobs don't require a high level of skill, but you find that they still require people. Marketing professionals are going to be probably replaced first with AI as teams get smaller and smaller because they get replaced by bots. We're going to see that trickle down effect. Higher paying jobs tend to not exist as much. that means that they're going to end up taking jobs that maybe they're overly qualified for. And eventually it'll trickle down to those of us that are trying to run properties that require a hands-on approach, hospitality in general. Hospitality requires a lot of one-on-one between people and the customer. And overall, I think we're going to see a slight increase in payroll and maybe have a better selection of people to hire as well. We'll see how that goes. As we see more and more of people still spending their money on moving, college, economic travel, again, we haven't really seen a huge slowdown in people traveling for, well, basic economic type stuff. The majority of our travelers tend to be in town for the fair or in town for some event that they're looking for a good deal. They're not necessarily looking for room service and five-star quality. They're looking for something that's affordable, right? So if you're in an economy brand hotel, you probably won't see a huge, in fact, you might see an uptick in business. Our hotel's doing better than our comp set, which is surprising because, like I said, we are the Ugly Motel, but people tend to stay with us because they see the value, or maybe they really like me, or it's just location. I don't know. Either way, we've seen an uptick in sales compared to our comp set. And we're starting to see that we're beating the more luxury brands.